everything is going to be tokenized, right? Everything, which means that you are no longer going to be able to buy Apple stock. You are no longer going to be able to buy Google stock. You are no longer going to buy Meta stock.
Hi, everyone. Happy holidays. Alex Kaminer here with Tim Nihill, our founder, and Alex Krieger, our digital asset analyst. We're here to talk about what's happening in the traditional and digital marketplaces. We help translate what's happening in the financial markets so people can use it in their day-to-day lives and make sharper financial decisions. For today's topics, we're just going to be talking about transitioning into 2023. We're going to give you the headlines on what's happening in the finance industry. And we're going to just touch slightly on Sam Bankman-Fried and FTX a little bit. We also just want to say congratulations to Argentina. We were rooting for them the entire time. But Tim, off to you.
Ole. Okay, off to me.
Yeah.
Hey, Krieger, it looks like you're hanging out down in the Bahamas with Sam.
I am. You sent me down here to go investigate, and so I'm down here, man.
You secured his extradition to the United States?
I did. I found him, and he's in jail.
That's awesome. All right, so why don't we talk about, out there, happy holidays to everyone watching and listening into this market update. So right now in our world, it's just transitioning and preparing for 2023. So 2022 was a very interesting year, obviously trying to unwind a lot of money printing and quantitative easing that has been happening since 2008. The markets have gotten kicked around. If you're playing the market game, what S&P is going to end up down like 25%, NASDAQ down 30-35%, bonds down 15%. A lot of interesting things going on. We've been talking about this for quite a long time with our clients and people we chat with every day. And I think in summary, it's just a preparation for next year because 2023 seems to be the year where the rubber is going to hit the proverbial road. So what does that mean? It means that from a market and an investment perspective, if you're playing the financial asset game, that means your equities, your bonds, your cash, you're probably looking at an ugly, ugly year. And what we're watching right now is we're seeing a massive transition from people with their finances investing in, indexes, bonds, bond funds, all that stuff. All that money is being pulled out of those financial and paper products and now starting to go to hard assets. So real estate, commodities, physical, tangible. We're seeing a return to fundamentals. And in this transition, quite frankly, it's going to get really, really ugly. Inflation is not going to get better no matter what they tell you. There's nothing they can do. The cat is so far out of the bag on this one. And next year is going to be, if you haven't put yourself in position for next year already, it's probably a little bit too late. So it's just been a very, very interesting thing to watch, especially from the inside, because you have the news that they publish and then you have what's really happening behind the scenes. And a couple of things and trends that we're seeing, I think that are going to pay dividends for our investors and for ourselves next year. I think was summarized by Larry Fink at BlackRock. 2 weeks ago, he spoke at the New York Times Summit. I think it's called, was it Deal Book, right? DEALBOOK. You can go on to YouTube, Google Larry Fink Deal Book 2022 and listen to what he has to say. What BlackRock says is important because they manage $8.8 trillion. Their risk analytics system is probably used to analyze risk on $40 to $50 trillion across the world. And they, at the end of the day, when you think about this, when you think about the Fidelities and the Vanguards and the BlackRocks of the world, and it's just that's here in America, not including what's in the Middle East and companies in China, et cetera, we're just in an age where these companies and these financial systems have outgrown governments. So these are the people that are really directing the future of the investment world. And if you hear and listen to what Larry has to say, there's some massive, massive things that are coming our way. And we think this presents some of the greatest investment opportunities that we're probably going to see in our lifetime and even in the lifetime of our children. And if you play this right, I think people can really, really generate some and accumulate wealth and secure assets and all that other fun stuff. The themes coming out of it are along the lines of this. Bond markets. In the United States, we've had a 40-year bull run, and we're no longer in a bullish bond market. So if your bonds are losing money, that's not a good thing, especially for people and retirees who have 40, 50, 60, 70% of their money in bonds. The bond markets are being completely transformed into something completely new, which is going to happen over the next, I would say, 36 months. So from our perspective, we're just watching the transition. Second part of that, if you listen to what Larry had to say, and you know, this goes to what we always talk about, right, Alex? Both Alexes. Everything is going to be tokenized, right? Everything, which means that you are no longer going to be able to buy Apple stock. You are no longer going to be able to buy Google stock. You are no longer going to buy Meta stock. You are going to buy Meta coin or BlackRock coin or whatever. Every single company will have a token or a coin that you buy as an investor that's no longer publicly traded on the New York Stock Exchange, right?
Correct. Yep,
if
and
you
you'll get your
listen-
voting rights that way through your shares and
Bingo.
everything. Yep.
This is going power back to the people because the voting rights, which have been controlled by the Fidelities and the BlackRocks and the Vanguards of the world, are now getting pushed all back to the individual investor. I don't think this is a bad thing. On top of that, if you listen to what Larry talks about in this FTX, is he says, I think he's spot on. He goes, listen, FTX got in trouble because they're a coin. They are not a distributed platform or distributed ledger, which is available to everyone around the world. He said that's where the secret of the sauce is, decentralized finance.
Yep.
Right? So the other thing he talks about is when you think about this, it's instantaneous settlement. So right now I can only trade and settle a stock and a bond Monday through Friday, 9:30 to 4. We're not going to be in that world anymore. We are going to be able to trade anything we want at any point in time and instantaneously settle our transactions moving forward. So that means the traditional financial marketplace, advisory firms, asset allocation models, all that stuff is dead. It's going away. The other thing which I thought was very interesting that the New York Times reporter tried to press Larry on was the fact that he said, you know, the reporter didn't understand, like, BlackRock is not a custodial firm. When I was there, one of the biggest things they said is, like, we're not a custody. We don't custody assets here. We're not a trust depository bank. If you listen to the messaging from BlackRock, and we happen to be pretty aligned with this, trust banking and depository banks are going away. And it's all happening, right? Like, the crisis that we're in right now is due to central banks and central planning. The banks are all bankrupt and broke. The younger generations have woken up to pretty much what a scam banking is. And we'll have some reels out from our insiders who, you know, are at Twin Shore that actually worked inside banks that will share. It's like sausage, like, you see how it's made, you never use it. And on the distributed ledger and blockchain and Web 3.0, there's no need to custody assets anymore. And we think this has significant ramifications, right? So it changes the financial and the investment world. It changes the real estate world, right? Real estate agents are going to be pretty much pushed out of business if they don't innovate. Real estate attorneys, you will not need them anymore. And potentially banks and lending, you're not going to have your traditional banks. You're not going to need to go to them anymore. And this blockchain technology it's coming, man. It's coming fast. And then think about it from an estate planning perspective. I don't need an estate planning attorney anymore because I can write a smart contract on the blockchain
Correct.
and I could pass my assets on to my beneficiaries any place, anytime, anywhere across the universe.
There'll just be a company that does it. You know
Right.
what I mean? You just cut cookie cutter, copy and paste it all in and boom, 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 boom.
Right. You could do that. You'll have people that will do specialty plays and there's always going to be a group of people that need help doing it. You're going to have the people that are the do-it-yourselfers. But the point is 2023 and 2024 are the years. Like, I think the first 6 months are going to be the proverbial quote unquote shit show, if you will, excuse my language. If you're looking at the S&P 500, the word on the street is it's going to drop another 25 to 30% in the first 6 months of next year. Banks are going to have to figure out credit markets, liquidity, all of that jazz. We may need to go back to the money printer. With what the Bank of Japan did yesterday and raising rates 50 basis points, it basically is another dagger in the US dollar. And it's just, the world is opening up where the United States is not the economic powerhouse anymore. The Russians are going to play, the Saudi Arabians are going to play, the Chinese are going to play, India's going to play. Europe is a disaster. Like, forget them. The Canadians, we'll see with Trudeau because he's a wild card, but he's a disaster. The rest of Canada is actually pretty friendly and a lot of innovation comes out of Canada. And then you have Southern America and Latin America, man, they're going to play too. So, from our perspective, we're looking forward to next year. I think there are some tremendous investment opportunities.
Right. So before we actually get into the digital market side of things and talking about what we think is going to be happening in 2023 with the digital markets and cryptocurrency, we just kind of also wanted to run down just the end of the year headlines that we're seeing in the news. Elon Musk, who says he's going to be stepping down as Twitter CEO, on top of the fact that Tesla just had its worst year to date. In their stock plummeted recently.
He sold $3.6 billion of shares in this past week. That's why Tesla's, I wouldn't say the only reason, but that was a major reason. And then what was the other thing? Oh, resigning as CEO. That was a test for bots. It was to see voting. And then did you see he said, just kidding, we had a count in the mail-in votes that said took it the other way on no. It was a joke and a play on the mail-in voting fraud.
Oh, that's funny.
That's amazing. Yeah, I think the Twitter thing is very interesting to follow and kind of watch. My perspective, I think it's just all a game. So I just can't wait to see all the info that's going to come out of this stuff and everything that just gets brought to light.
Especially yeah.
Right, from a market and investment perspective, think of this. So you have a CEO sell how many? $3.6 billion worth, right?
Right.
$3.6 billion worth of Tesla stock. Who bought it?
I don't know. We probably open market or someone did.
Anyone that
government.
Anyone that owns the S&P 500 bought it.
Yeah.
So that means every indexer 401k IRA out there with a CEO just basically cashed in a lot of his chips on his company. They all bought the stock.
Interesting.
Right. That's a pretty interesting.
I got a question. Can they ever ring in all the stock back after the split they just did? Could they say, oh, after he sells a bunch, come back and be like, you know what, we have too much to make it worth more. We're going to buy back all these shares and make it, you know what I mean? More in value.
Sure. They can do stock buyback. The one strategy that I've heard about on the street is going back to what Larry Fink said. And you're seeing some large companies do this right now. Think of tokenization. So, okay, I don't want to be a publicly traded company anymore on the New York Stock Exchange because regulations are quite frankly just a pain, and they're just pain. It's painful.
Yeah, they're
You're
abysmal.
dealing with, right, you're dealing with laws that were created in 1933, 1934, and 1940, and 1974. Right? How many years ago is that? 90
50.
years almost, right?
Yeah,
50,
well, 50 and the
right,
latest end.
right. So we live in a world where the regulations and all the legalese is written almost 100 years ago. This stuff's outdated. So this is what companies I think are going to use the blockchain for, because if I create a Tesla coin, I can just have my investors buy the Tesla coin, and I can buy back all my stock and go from public to private again. And then similar to a bond or an equity play, I issue my own coin with an own agreement between every shareholder. Like, hey, this is going to be something that's acts like a bond. It's fixed. You have, ownership in the company, and we'll pay a, 5-6% year dividend.
In Tesla coin or what?
Yeah, in Tesla
yeah.
coin. Yeah. There are a lot of interesting applications that I think the blockchain is going to bring to light and offer to pretty much everybody out there.
Yeah, I agree.
Yep.
So
Future.
speaking of the blockchain, do we want to give a quick update on the end of the year and what we think is
Yeah, I think you'll start seeing maybe a little bit of a turnaround. You'll have a little bit of a pump, and then shouldn't break maybe high 1700s for Ether, maybe back up to 25, low 21s, maybe up in that for BTC. And we're just going to play in this range between then, is my opinion. You could see another low test back down to the lows, but I don't think we go lower. There's no liquidity like we've been saying for the past couple of weeks. And then, as we touched earlier, tokenization of everything. We watched that Larry Fink speak at that seminar, and it was really interesting to see what he had to say about tokenizing all assets and how it's going to be a new digital ledger, which I want to know what ledger that is.
I think everybody wants to know what ledger that is.
Right. I want to know what ledger that is. What ledger are you using?
Hey, with what is out there today, because you have, Ripple and Ethereum and all these different ledgers, if you had to take your best guess at what that ledger would be,
I would say Ethereum. But yet look at all the banks right now. Ripple works with all the banks. I don't know how the lawsuit's playing out. I haven't checked in on it in a month or two. But Ripple could be it. My honest opinion is it could be a CBDC, a total. They've talked about it recently about starting one over the summer. So I maybe a whole new product in a sense, right? From the top IMF or big banks. Who knows? I think it could be a new one.
Cameron, you a couple of weeks ago talked about and shared with people the CBDC program that they're testing down in New York with like Bank New York Mellon, et cetera.
Yeah.
Any new updates on that? Any word on that?
No new updates in the news or on the street that I'm hearing or seeing. But to talk a little bit about what Alex just said, I think Ether is a pretty safe bet. Like, even if Ripple's lawsuit goes in a positive direction, Ether is going to be used, I think, forever.
It's going to be modern internet. It's Web 3.0. Everything's going to be, think of it, the internet and your financial system mixed to one. You're going to have all your own apps that are in your own wallet is your ID, is you're going to be your little avatar, and you're going to go around and buy whatever you want with your Ether or your money that way. That's what the future is looking like. Your kids, my kids that's what they'll be experiencing.
It just seems like my generation, Generation X, we're like the suckers in all this, I think. If you want to use like we're like the last kids at the plate at the dinner table, because you have the old system, right? Is the old industrial complex, which is being transitioned away from. So anyone who's a baby boomer is on that program,
Correct.
right? And then you have Gen Z, millennials, etc. I got that one right? That are just universes ahead of everybody else, especially with technology. And it just seems like we're sitting in the middle and we're like, oh, great.
Well, it goes Gen X, then millennials, then Gen Z, right? Yeah.
Yeah, so Gen X, I mean, we'll have our group that'll be on that old industrial playbook, which is, hey, save in a bank, buy a 401k, hope Social Security's there. And then you're just gonna have the next generation, which is gonna be all this decentralized finance technology, you know.
Well, and
all
you guys get the last dip, right, in the last crash or the bubble that pops. The Gen X are the people able to have the capital to be able to buy on the net, like the financial dip that happened in 08. Anyone that had cash or capital accessible to buy up assets during that time came out fairly well. And Gen X generation is in that, has the capital, right, for the most part, has the money, and can, if they have it right in position, right, they could capitalize on that. Yeah.
Yeah, some but not most, remember, because 08, 07, 08, 09 was about 15 years ago.
That would
So-
be when, like, you as my age, right? You're 45, right? Just about.
30
Yeah. So
at
yeah.
30.
Yeah. So around my age, I'm 32.
I remember when that hit, I was 2 weeks into a new firm as their Boston office, which was out of my home office.
Mhm.
I just watched the market drop 40%. And I went, oh boy, man, if my firm makes any cuts, I know who's first.
Let's go.
It was great too, because I had a baby of about a year old. My daughter was about a year old. And I was like, I sat there watching the markets and I went, holy crap. So
Oh boy.
it was interesting. But I mean, at that time, I think even that it was the talent of the boomers that had the capital at that time.
Yep.
Not most Gen Xers. I think most Gen Xers are hoping, on this next drop in and recovery and transition that we could take advantage of it.
All right. Well, I think that's everything we have for today. Is there anything else that either of you wanted to mention before we sign off?
Nothing. Just have a happy holidays. And
I like the Rudolph the Red-Nosed Reindeer silver and gold song, but I would like to add Bitcoin to it as well. No, happy holidays to everybody out there.
All right. Well, everyone, thanks for watching and tuning in. And on behalf of Twin Shores Financial, I hope everyone has a happy holidays and a happy new year. If you enjoyed and want to keep up to date on the markets, please tune in every other Thursday for all your financial information. Please don't forget to like, share, and subscribe. And if you have any questions, please don't hesitate to comment them down below. Yeah, happy holidays again.